Good evening, everyone. Join fast. Hi, everyone. Join fast. Good evening. Good evening, everyone. Join fast. Okay. Hi, everyone. Joined? Chalo. Let's start. Let's start, everyone. Chalo. Let's start. Hi, good evening, Shiva. Chalo. Let's start. Let's start with numericals marathon today. See, numericals and PYQ both combined. Majorly I'll cover numericals and then PYQs also. Mix. Okay. So let's start. First one, numerical on rent calculation. Rent. Okay, pay attention. Very important, 5 marks numerical. Generally it comes for 5 marks or it can be broken down into some small parts. Okay. So read this properly. First read it, everyone. Good evening, Zinat, good evening, Shiva. Read it properly, everyone. A new building stands on a plot costing 10 lakhs. Construction cost is 20 lakhs. Expected returns 5% on land cost and 8% on construction cost. Expenses, annual repairs 0.5% of cost of construction. Other outgoings 30% of the gross rent. Good evening. Coefficient of sinking fund 0.005 of construction cost. Find the annual rent. See this, read it everyone, properly read it. Look at the problem now. This problem will be there in exam. Almost every exam it is there. Every. Okay. So how will you solve this? See, first understand what do you want. The problem is divided into two parts. First, what do you want? Okay, what do you want? So this is what you want. You can check it out over here also. Okay. See, this is what you want. What I want, expected returns. What is it? 5% on land cost, 8% on construction cost. Expected returns. Okay. And what am I getting? See, I am getting the rent. And out of this, this is my outgoing. This is outgoing. This money is moving out. What is it? Annual repairs, 0.5% of the cost of construction. Other outgoings, 30% of the gross rent. Coefficient of sinking fund is 0.005 of construction cost. So this is actually what is going out. This is what I want. And this is my total cost. New building, 10 lakhs plot cost and construction is 20 lakhs. So now let's start with this problem by what I want first. Let's see. Say this. Expected returns. Pay attention to this. Now pay attention everyone. Expected returns. Okay, I'll tell you to solve because I'm already having this solved. You all give me what is my expected return now. Expected return. See, 5% on land cost. Land cost is what? 10 lakhs. So I want 5% on 10 lakhs and 8% on construction cost, 8% on 20 lakhs. So you give me the figure for what is expected return. Everyone try this. Because exam is just 2 days away. You must be able to solve it. Let me see the questions as well as let me see the answers from your side. What are my expected returns? I'll give you at the end, but first you give me. Yes, what is my expected return? Everyone focus. What is it? 2,10,000? Shiva. What about others? One answer I have got it. 2,10,000. What about others? 2,10,000 is one answer. What about others? What about others? Correct? 2,10,000. Very good. See, what am I requiring? 5% on 10 lakhs means how much? 10% is 1 lakh. So 5% is 50,000. And 8% on 20 lakhs. 8 to the 16. So 1,60,000. So 160 plus 50. 210. Right? So I am getting 2,10,000. See this. 2,10,000 I am getting. Got it? 5% on 10 lakhs plus 8% on 20 lakhs. 50,000 and this is 160. So 2,10,000. Let's mark this as A. Let's mark this as A. Okay. Now what are the expenses? Now look at it. Expenses. 0.5% of the cost of construction. So what is cost of construction? 20 lakhs. So 0.5% into 20 lakhs. 0.5%. Kindly note. It's not 0.5. 0.5 upon 100. So 0.5% into 20 lakhs. Number 1. What is the answer? Everyone give me the answer. 0.5% of 20 lakhs. What is the answer? First one. 0.5% of 20 lakhs. 5 to the 10. Right? 10. And divide everything. Percent means divided by 100. So what are you getting? 0.5%. 10,000. 10,000. Okay, Atik, just check. One zero is missing. 10,000. Manjula, correct. 10,000. Others. All of you. 10,000. Okay? 10,000. Very good. So first answer is 10,000. Shall I write it over here? See this. 10,000. First outgoing is 10,000. What is the second outgoing? First is, this is all going out. What is the second outgoing? Other outgoings, 30% of the gross rent. See this, 30% of the gross rent. But you don't know the rent. You don't know the rent. So what we'll do is, we'll just write, let the rent be R. Let the rent be R. Okay? So let the rent be R. Now look at it. See this. So it is now what? If the rent is R, see first one what did I get? 0.5% of 20 lakhs. So I got it 10,000. 0.005 into 20 lakhs. That is 10,000. All of you got this. First one 10,000 you got it. Next 30. What is this? 30% of the gross rent. So let the rent be R. Let the rent be R. So 30 upon 100 into R. So it is 0.3 R. 0.3 R. Everyone getting this? 0.3 R. Everyone clear in this part? The other expense is 0.3 R. Everyone clear in this? You all should have this concept very clear. Type yes in the comment section if you have understood this. 0.3 into R. Understood? Type yes. Because unless you understand this, it's of no use. Any doubt in any mind? Anyone is having any doubt? Got it? Zenith, correct. Others, all of you understood it? So this is right. Now third one is what? See, 30% done. Coefficient of sinking fund is 0.005 of construction cost. So 0.005 of construction cost. What is construction cost? 20 lakhs. So 0.005 into 20 lakhs. So again this comes out to be, again check this everyone. Again what is it? 0.005 of 20 lakhs. So it is again, everyone, it is again 10,000. See, this is 10,000, right? This is again 10,000. Everyone getting this? 0.005 into construction cost is 20 lakhs. Everyone got this? 0.005 into 20 lakhs. Everyone should be clear in this. 10,000. So now look at it. What are the outgoings? 1, 2 and third one is 0.3 into R. This is your total outgoing. This is your total outgoing. 10,000 plus 10,000 plus 0.3 R. Right? 3. 1, 2, 3. Okay? Got it everyone? So add this. So this becomes what? 20,000 plus 0.3 into R. 20,000 plus 0.3 into R. This is the outgoing. This much is going out. See, this much is going out. This is going out. Right? So if this is going out, what am I getting? See, net net. Look at this. I am getting rent R. Out of this, this is going out. Out. See, I am getting rent R. And this is going out. So what is remaining then? R minus out. Right? What is remaining with me? R minus out. One second. Electricity, yeah. Just hold on, 1 minute. Just 1 minute. Hold on. I'll check it. Hi everyone. Let me see if I'm connected. मैं आपको कॉल करता हूँ कुछ इशू होगा तो, ठीक है? Am I audible to you, all of you? Hi everyone. Hi. Am I audible? Yeah, no? Chalo. Yeah. There's some. Okay. There was some technical issue over here. Chalo. So we were over here, right? We were over here that we had calculated this 10,000 and 0.3R. So whatever is remaining, so what is remaining now? 1R, see the rent which I am getting is R. R minus this 20,000 plus 0.3R. R minus 20,000 plus 0.3R. So that is equal to 0.7R. Pay attention. That is equal to 0.7R minus 20,000. Okay? 0.7R minus 20,000. Okay now? Yeah.
Okay, Vishal.
Okay. Yeah, okay. Okay? So 0.7R minus 20,000. So this is now B. See, understand the problem first. I want 2,10,000. I am getting 0.7R minus 20,000. This is what I am getting. So what should I do? I must equate this. A equals to B. See this. A equals to B. So it means what? 2,10,000 equals to 0.7R minus 20,000. 2,10,000 equals to 0.7R minus 20,000. So solve this now. Take 20,000 on the other side. So it becomes what? 2 lakh, what is this? 30,000. So 0.7R equals to 2,30,000. So R is what now? R equals to 2,30,000 upon 0.7. So what do you get over here? So that is equal to 3,28,571. 3,28,571. This is the annual rent which I am getting. And this is what is wanted. See what is required in the problem. Find the annual rent. That is what is required. 0.7. 0.7 means, how did you get 0.7 over here? Check this. How did you get 0.7? See this. 1R. Understand the problem first. What is it? See, whatever I am, pay attention. Whatever I am, what am I getting from this? From the house, what am I getting? I am getting rent R. This much I am getting, rent R. Out of this rent, what is happening? This is my outgoing. We saw this outgoing earlier. 10,000 plus 10,000 plus 0.3R. So 1R minus this full bracket. 1R minus this full bracket. Now you solve this bracket. So 1R minus 20,000 minus 0.3R. So 1R minus 20,000 minus 0.3R. So that is equal to what? 1 minus 0.3, 0.7. So this is how you got 0.7R. Okay? Got it? This is how you got 0.7R. Got it? Clear everyone? 0.7R, how did you get? 1R minus 0.3R. This one. 0.3 we got it earlier. 30% of R, right? Same thing. So 1 minus 0.3, so 0.7 R minus 20,000. Clear, everyone? This much. So now you get it. You got R is simple. Okay. So this is your annual rent. Got it? So this numerical of annual rent comes for around 5 marks in exam. Either it will be for 5 marks or it will be divided into 2-3 parts and they'll give you something or the other here and there. But something will be there of this sort. Okay. Next, tax numerical. My business income is 15 lakhs and let's say 9 lakhs, let me cancel. My business income is 15 lakhs. Find my tax. So very simple. My business income is 15 lakhs. Now, those who are in the paid class, in the morning I took it, right? So I'll just give you an idea. It's a table, right? Table of 4 and table of 5. Clear? So what is the tax bracket? It's a revision for you, everyone. Tax bracket. And second is tax percentage. Percent. Right? So everyone pay attention. Tax bracket is a table of 4. Table of 4. Table of 4. And this is table of 5. Table of 5. Okay? As per the new tax regime. 115 BAC. This is a new tax regime. 115 BAC. Got it? As per this new regime, it is 0 to 4 lakhs, then 4 to 8 lakhs, 8 lakhs to 12 lakhs, then 16 lakhs, 20 lakhs, 24 lakhs, and greater than 24 lakhs. This is your table. Table of 4. Right? And this is what table of 5. So it is 0, then again start with 5, like this. 5, 10, 15, 20, 25, and 30. Right? Mark this 1 to 1. This is your table of tax. Okay? 0 to 4, 4 to 8, 8 to 12, 12 to 16, 16 to 20, and 20 to 24. Okay, it is like this. Got it? Suppose if you have a, let's say, I'll give you one logic. Okay? If you have, yeah. So what is the answer for this? First, let's find out the answer for this. 15 lakhs is my income. So here I'll have to pay complete 0, no tax. So here no tax, over. First 4 lakhs, no tax. 4 lakhs to 8 lakhs. So here I'll pay 5%. So 5% into 4 lakhs, right? 5% into 4 lakhs. So what will be the answer? Find out the answer. Everyone get the answer. 5% into 4 lakhs. Then again 10%, because here it is up to 12 lakhs, into again 4 lakhs. 4 lakhs means this 4 lakhs, 8 and 12. 12 minus 8. So get the answer. Now my income is 15 lakhs and here I am having 16. So what will I do over here? 12 to 15 I will take, not 16 now, right? So it is 3 lakhs. So 15% into 3 lakhs. Now get the answer. Everyone check this. First one is 0 tax. Second is 5% into 4 lakhs. What is the answer for 5% into 4 lakhs? 20,000. Correct? Everyone get this. 5%. 10% is 40,000. So 5% will be this 20,000. So 20,000. Next, 10% into 4 lakhs. So 40,000. Right? 10% into 4 lakhs. 40,000. 15% into 3 lakhs. 45,000. So what is my total answer? 40 plus 20, 60. 60 plus 40, 105. Right? So 105, 1, 2, 3. This much is the tax I'll be paying. This much is the tax I'll be paying. Very good. All of you have answered correctly? Yeah. This is the tax I'll be paying. Right? Suppose if I get, everyone got this? Now I'll ask you one question. If my income is 8 lakhs, 8 lakhs is my income. Where will I keep 8 lakhs? Will I keep 8 lakhs over year or year? All of you answer me. Should I keep 8 lakhs in 5% or should I keep 8 lakhs in 10%? You answer me, everyone. If my income is 8 lakhs, dot 8 lakhs, then where should I keep the 8 lakhs? In 5% or should I keep it in 10%? What do you say? Or somebody is answering no tax. Okay. Suppose if my income is, let's say, 20 lakhs. So now where will I keep this 20 lakhs? In this 20% or in this 25%? Yeah. My income is, let's say, 20 lakhs. So where will I keep this 20 lakhs? In this bracket or in this bracket? Yes? What are you answering? 20,000. What? No tax. That is separate. So it is, kindly note, first you understand the concept, whatever I am telling you. The question is not whether you have to pay the tax or not pay the tax. The question is, where will you keep this? 8 lakhs will be in which bracket? This or this? That is the real question. Up to 12 lakhs you don't have any tax. That's agreed. But the question is, where will you keep this 8 lakhs? In this bracket or this bracket? Or for that matter 20 lakhs. Where will you keep this 20 lakhs? In 20% bracket or in 25% bracket? That's my question. See, the answer over here is, whenever you do this, always keep it in the higher bracket, not in the lower bracket. So this 20 lakhs will go in this bracket, higher bracket, not in the lower bracket. Okay? 20 lakhs will go in the higher bracket, not in the lower bracket. Clear, everyone? So, one more thing you note, up to 12 lakhs, you don't have any tax under the new tax regime. Up to 12 lakhs, you don't have any tax up in the new tax regime. Okay? Also, ATC is not applicable in the new tax regime. Not applicable at all. It's of no use. Okay? So, all your mutual fund investments or for that matter insurance, PPF, zero. It's of no use. Okay? Got it? So everyone got this? Now you give me the answer for all of you. Give me the answer. If my income is, let's say, 23 lakhs. If my income is 23 lakhs, how much tax will I pay? Can anyone give me? My income is, for that matter, I'll ask you now. Okay? My income is, let's say, 23 lakhs. So what will you give me? What is the this tax I'll be paying? Now you answer me this. 23 lakhs. Now answer me this. If my income is 23 lakhs, 23 lakhs means year. So up to this time, everything will be paid. So 0, let's start this. Shall I rub this? This is over now. So let's start. This is same, this will change. So try this. So this is 15% into again 4 lakhs, right? 4 and 4 lakhs. Okay, 15% into 4 lakhs. Again, 20% into 4 lakhs. And last one is 23. So 3%, 3 lakhs. This is 3 lakhs. 3 lakhs into 25%. So now get the answer, everyone. So what is the answer for this? 5% into 4 lakhs, 20,000. 10% into 4 lakhs, 40,000. 15% into 4 lakhs, 15 4 is 60, right? So 60,000. 60,000. 20% into 4 lakhs, 80,000. Are you getting this? And 25% into 3 lakhs. So 75,000. So this much tax I will be paying. Do the total of all. 40 plus 20, 60. 60 plus 60, 120. 120, 2 lakh. 275. 2 lakh 75,000 I am getting. Are you getting it? 2 lakh 75,000. Very good. Okay? Very good. 2 lakh 75,000. So now, everyone got this? Because one tax numerical will be there in your exam, compulsory. You have to remember this. Okay? Next. This, I think so we had done it earlier. I think so we have done this in the batch also, paid batch also. I think so we have done it. In the morning only we did it. Right? Capital gains. So we'll move to theory now. According to RBI guidelines, what is the minimum frequency for the banks to internally identify financial assets for potential sale to the other institutions? This theory is there in your securitization chapter. Securitization. This theory is there in the securitization chapter. So, what is the answer? This is there in the book also. Kindly note, it's given in the Macmillan book. So, as per the RBI guidelines, what is the minimum frequency for the banks to internally identify the financial assets for potential sale to other institutions under securitization? So what is the answer? Securitization. What is the answer? Anyone? Quarterly, within 15 days of closing, at least once a year. Correct. Who's this? Jaya Chitra. Very good. Others. Yes, first answer I have got it correct. It is at least once in a year. Kindly see, you will not find this question anywhere in any book other than your Macmillan book. None of the books have covered this question. Okay, but I'll guarantee you, you will see it in the exam. Why? Because this is a part of your studies and a part of your Macmillan book. Okay? So the answer is B, once in a year. Regulatory guidelines require banks to identify and list assets for exit at least once a year. Got it, everyone? Which regulatory requirement must be met specifically when securitizing performing assets? Which regulatory requirement? See, now very important one. Which regulatory requirement? Again, you will not find this question in any other book. Anywhere you will not find it. Because these are created from the Macmillan book by going through the book. So now, what is the answer? Which regulatory requirement must be met specifically when securitizing performing assets? Performing means which are good, which are standard. Mandatory 100% cash settlement, minimum holding period and minimum retention requirements, minimum credit rating of AAA, direct approval from Ministry of Finance. Very tough one. Very tough. Very tough. Correct. Who's the Jaya? Amita Patel. Very good. See, the requirement is this. This is the requirement. Minimum holding period and minimum retention requirements. Okay? Minimum holding period and see, it means what? What do you mean by this question actually? Understand this. If I am, let's say, giving some loan, good loan, standard loan for securitization, selling it to SPV, then I must minimum hold this loan for a typical period given by RBI. Okay? So this is called as minimum retention, this holding period. And how much part of the loan should I hold? That is also given by RBI. If the loan is of, let's say, 10 crores, I should hold 20%. So 80% can be given to the SPV. So this is the requirement. Okay? Minimum holding period and minimum retention requirements. Got it? Numerical on CAC calculation. Now what is this CAC calculation? You will see again, this numerical you will not find again. It's not given in the books also. Only Macmillan book has this. Macmillan book has this formula. Even Macmillan book doesn't have this numerical. Macmillan book does not have this numerical also. But it has the formula. So if the formula is there, there are chances that IIBF will find out a numerical on this. Very easy one. CAC calculation. What is CAC? Customer acquisition cost. In which chapter is this? In which chapter is this? Anyone can tell me? Which is this chapter? Which chapter do we have this? CAC calculations. Yes? Anyone knows? CAC calculations. Which chapter? Let me see. How many of you have read the books or gone through the classes, paid classes? In the detailed batch, I had taken this. So it is, anyone? It is in MKIS. MKIS, Marketing Information System, Module C. MKIS, Module C, Marketing Information System. See, CAC calculations, okay? Customer acquisition cost. Understand this formula. Customer acquisition cost means what? Suppose if you do any campaign for marketing, any campaign, from that campaign, how much do you spend in the campaign and how many new customers you get in the campaign? That is basically CAC. Getting this, everyone? How much do you spend and how many customers you get? It's very simple. Okay? So now, total marketing spend. Look at this problem. Imagine a bank that runs a marketing campaign for a month. So this bank is running a campaign for a month. Total marketing spend is rupees 50,000. So total spending is 50,000. Then what? Total new customers acquired is 100. So total 100 customers have been acquired. First, what you have to find, look at this only. Look at this part, up to this part only. Now first you have to find out CAC, customer acquisition cost. How will you find out? See, CAC is very simple. Customer acquisition cost is how much am I spending upon how many new customers I have got. Okay, how much am I spending upon how many new customers I have got. So it's very simple. How much am I spending? 50,000. How many new customers? 100. So 50,000 upon 100. So that is equal to what? 500. 500 is my CAC per customer. Customer acquisition cost is 500. Got it? Got this everyone? CAC is 500. Customer acquisition cost. It is there in the Macmillan book in MKIS chapter. Okay? So everyone got this CAC now? Clear? Customer acquisition cost. By heart this formula. Second is, what do we require? Payback period. What is the payback period for the CAC? Payback period. What is the payback period? Now payback period means what? Whatever is my CAC, customer acquisition cost, whatever is that, upon my net profit from that customer. Net profit. Now how do I get this? Look at this. Sales per month to the new customers means all these new 100 new customers. What is my sale per month? 100 rupees. Expenses per month on the new customers. Expenses per month on the new customers is 30 rupees. See, sales is 100 and expenses are 30. So what is my net profit? Net profit is 100 minus 30. Clear everyone? Everyone is getting this? All of you are getting it? Type yes in the comment section if you are getting it. Everyone getting this? Getting it everyone? 30 rupees, okay. Which one 30? I'll just explain you. Hold on. Danishka, 30 rupees explain. Which is 30? See, this 30 is given. See, this will be given to you in the problem. 100 rupees is the sales and 30 is the expense per customer. I am spending 30 rupees and I am getting 100 rupees from that customer, sales. So what is my net profit then? 100 minus 30. Getting this? Everyone? Got it? Danishka and others. Got it? So now find out the payback period. Payback period is CAC divided by net profit. CAC divided by net profit. So what is my CAC? CAC I know 500 rupees. Upon what is my net profit? Net profit is 70 rupees. Right? So 500 upon 70. So 7.1 months is my payback period. Okay? 7.1 months is my payback period. Simple, very simple. Okay? Problems are very simple in MKIS. In May 24, this problem was asked. May 24. Today is 26. So May 24, this CAC problem was there. Okay? So formula are very simple. If you remember the formula, you will be able to solve it like anything. But you must remember, very simple formula. What is there? Spending upon number of new customers, CAC. CAC upon net profit, payback, over. Got it everyone? If in the exam the problem comes, will you be able to solve this? Right? You will be able to solve this everyone? Type yes if you have understood it. Next one. If you have understood the problem, earlier one, now you will solve this one. This you will solve. You all guys will solve. And give me the answer. Check it everyone. Look at the problem. A bank uses two different channels to acquire new credit card customers. So two channels are used. Channel A, online advertising, spending is what? 5 lakhs. New customers 200. Similarly, channel B, road shows, spending is what? 10 lakh. New customers 300. Which channel is better? Which channel is better? How will you answer this? Everyone try this. Which channel is better? Think of it. Which channel will be better over here? A or B? Yes? Let's see. A or B. Okay? Let's find out. Find out a CAC per channel. CAC for channel A is what? 5 lakhs I am spending, I am getting 200 customers. 5 lakhs spending, 200 new customers. So what is my CAC? 2500. Right? Second one, channel B, 10 lakhs I am spending, I am getting 300 new customers. So what is my CAC? 10 lakh upon 300. So it is 3333.3. So customer acquisition cost in channel A is 2500 and channel B is 3333. So now you tell me which channel is better. Which channel is always better? The channel which has low cost will always be better. The channel which has low cost will always be better. So 2500 is always good because it's carrying low cost. Got it? So got the formula for CAC now. Spending upon new customers. Okay? In context of selling stressed assets, what is the primary objective of inviting participation from multiple buyers like ARCs, NBFCs and FIs? Whenever we sell the loans under securitization, why do we invite these NBFCs, ARCs, all these companies? Why do we invite it? To reduce the legal documentation time, to distribute the risk across entities, to achieve better price discovery, to avoid the need for special purpose vehicle. What is SPV? Special purpose vehicle is that company to whom we sell the loans. So it is compulsory. You cannot avoid it. You cannot avoid this. So what is the answer? Why do you invite all these companies? The reason is, see, this is there in the Macmillan book summary. I'll tell you. You check the securitization chapter. All of you, if you have doubt, go right now in the book. I've gone through your entire book. Go through your entire book, go through that chapter of securitization, go into summary. In summary, you will find this question. Means they'll give you the line. We invite ARCs, NBFCs for price discovery. Achieve price discovery. This is the main part. Price discovery means what? See this, price discovery. Price discovery means to get a better price. See, ultimately I have to sell this loan. Under securitization, I have to sell it. I'll be selling to whom? I'll be selling to anyone who gives me higher rate. So all these companies come together and they do the bidding. Bidding. I'll buy this loan for 1 lakh. Other one says, I'll buy this loan for 2 lakh. So I'll sell it to 2 lakh. Isn't it? That's called as price discovery. Okay? To achieve better price discovery. That is the answer. Macmillan book, check securitization, summary, you will get it. Okay? Under current norms, effective from April 1, 2018, at what investment threshold security receipts must a bank continue to provide for sold assets? Difficult one. Okay? If the investments in the security receipts exceeds 50%, if the investment in the SRs exceeds 25%, if the investment in the SRs exceeds 10%, if any amount of SR are held by the bank. Now, what are security receipts? That is also important. Under securitization, security receipt means the receipt given by that SPV to the bank. Understand this securitization. How does it happen? Securitization. This is the bank. This is the bank. This bank gives loan to borrower. Bank gives loan to borrower, right? This is the borrower. Bank is giving the loan. Bank will sell this loan. Sell, okay? Sell the loan to a private company. Private company is called as SPV, Special Purpose Vehicle. So this SPV will give SR, security receipt, SR. See, bank is selling loan, SPV is giving SR, security receipt. This SPV will further sell the loan, convert this into bonds, and sell it to investors. Investor. This is the overall process of securitization. Bank sells the loans to SPV. SPV converts it into bonds and sells it to investors. Bank will give loan, SPV will give money in form of SR, security receipt. Okay? So now the question over here is, at what investment threshold in the SR must the bank continue to provide? So what is the threshold? Now this is the exam question. The threshold over here is 10%. If the investment in the SR of the bank is more than 10%, you will, this bank will continue to provide for sold asset. Okay? If your investment, remember this 10%, if it comes in exam, because it is there in the Macmillan book, that's why there is a chance of coming. Okay? What is the role of SPV in securitization framework? What is the role of SPV? It acts as the primary regulator. It is a legal entity that buys assets and issues tradable units to investors. It serves as a government bank guarantee. It is a department within the bank that manages NPS. So what is the answer for this? This is easy. Just now I told you. Right? This is very easy. Correct, Danishka. Okay, the answer is B. Got it? The answer is B. B. Okay? The SPV is a thin entity created solely to hold assets and issue securities to the investors, keeping them separate from the originator's risk. SPV will separate the loan from the bank. Okay? SPV will separate the loan from the bank. See, these questions are very tough. These are from the book, gone into the book and then found out. Okay? So, if you don't know, kindly learn this, by heart it. If you don't know, it's okay. It's not compulsory that everyone should know everything. Who has the ultimate authority to determine the eligibility criteria for asset to be that can be securitized in India? So, who has the ultimate authority to determine that, see, if I am the bank, these loans are to be sold to the securitization. So, who will decide this? SEBI, Indian Banking Association, RBI, and individual banks' internal auditors. Who is the ultimate authority to tell that, see, these loans I have to sell it to securitization? Who will tell this? Is it SEBI? Is it IBA, is it RBI, or is it auditor? Let me see. How many of you are answering this? Many of the questions are bouncers, right? Tough ones. B, IBA. Many of you are saying B, IBA. Let's see. It is auditors or RBI. RBI as a banking regulator sets the specific eligibility criteria for which loans can be packaged into securitization deals. Ultimately, it's RBI. See, for us, SEBI is not important. Not even IBA is important. For us, everything is RBI. Whatever RBI says, we will follow that. Very simple. In exam also, if any question is there and you don't understand the answer, but there is RBI written in it, right? RBI will be there. Okay? Mr. Rohan runs a small trading business with an annual turnover of 80 lakhs. Pay attention. He opts for presumptive taxation scheme under section 44 AD. If all his transactions are digital, calculate his presumptive income and tax liability under the new tax regime. What do you think? Everyone, try this. In the morning, I told you about 44 AD. See, 44 AD is a new tax provision. What does it say? It says that if there is any businessman, small shopkeeper, any businessman who does not maintain the books, see, pay attention, does not maintain the books, maintain books, okay? So, if I am a shopkeeper, I am a small shopkeeper, I don't maintain any books, I'll just sell the material and get the money, that's it. I don't have any books. Books means ledger, nothing. So then I can file the tax return under 44 AD. And the limit is 2 crores. Okay, 44 AD limit is 2 crores. So now what is the tax I'll be paying in this case? What is my income? See what is given. All the transactions are digital. Why is it mentioned? All the transactions are digital. See what does 44 AD say? 44 AD says, pay attention, if my transactions are in cash, then 8% of turnover is my income, minimum 8% of my turnover is my income, profit, okay, 8%. And if it is online, then 6% of my turnover is my profit. So now what is given over here? Now you think, I have given you the hint. Now you tell me. 8 6 are 48. See, you will take 6% now, 6%. Why? Because it is given, it's digital, means online. So what is my profit in this case? 80 lakhs into 6%. So what is the answer? 80 lakhs into 6%. So it is 4,80,000. 4,80,000. Right? This much is my profit. Right? This much is my profit. So now what is my tax then? What is my tax? 4,80,000 is my profit. What is my tax? Who can give me? Tax amount. What is my tax amount? Yes, anyone? What is my tax amount? Somebody has written 4,000 as a tax. What do you say? What is my tax amount? Tax. How much tax will I pay now? 4,80,000 is my profit. So how much tax will I pay? Yes, anyone? How much tax will I pay? 0. Very good. Who's this? Shiva Krishna. Very good. 0 tax up to 12 lakhs. Up to 12 lakhs. 0 tax. Right? 115 BSc. Up to 12 lakhs. See, remember this section 115 BSc. This is your new tax regime. Up to 12 lakhs you have to pay 0 tax. So no tax will be paid. I think so. Your answer is given. See this. Yeah. 0 tax. Tax paid will be nil. And the rebate which you get is under section 87A. See, the rebate under 12 lakhs means where you don't pay the tax. That rebate is under section 87A. Kindly remember this number also. 87A. Okay. Now theory. Within the banking institution, which body is responsible for approving the internal list of financial assets identified for sale? So again, securitization. I am deliberately taking securitization because securitization theory will be there, compulsorily will be there. Because now all the banks are focusing on securitization. Yesterday, day before yesterday, we took many other topics. Today, I specifically pointed out on securitization. So, which is the body which will decide whether to give the financial assets for sale or not to SPV? Who will decide? Credit Risk Department, Board of Directors, ALCO, and external statutory auditors. Who will decide that whether the loans are to be sold to SPV, sold to the securitization company, sold to SPV? Who will decide? Anyone? Ultimately, who will decide? Net. Who will decide ultimately? Very good. C. Many of you are answering C. See, one thing you note. All of you note. B is the answer. Why? Board of Directors. Why B is the answer? See, the reason is very simple. Let this be Credit Risk Department, let this be ALCO, let it be auditor. Ultimately, they report to whom? Ultimately, all of them report to whom? See, all these departments report to MD, Managing Director. But MD reports to whom? MD reports to Board of Directors. MD reports to Board of Directors. So, ultimately, let you call this ALCO, or you call this Credit Risk, or you call this Statutory Auditor. Okay? All of these will give the suggestions. They can give the suggestions that yes, we can sell this asset, we can sell this. They can give the suggestions. Decision is taken by this body, Board of Directors, always. Okay, so the answer is B, Board of Directors. Again, check securitization chapter, Macmillan book, and you'll find this. Okay. Which category of assets are eligible for securitization process? only standard high performing assets, only substandard and doubtful assets, NPAs, both performing and non-performing assets, only unsecured personal loans. So now think, which of them are eligible for selling, securitization? Which loans do we sell? Which loans do we sell? Yes? What do you think? Which loans do we sell? B. Many of you are answering B, NPA. Kindly note, the answer is not B. The answer is not B. The answer is C. You can sell performing and non-performing, both. Standard good loans also, bad loans also. You can sell it to the SPV. Both are allowed. Okay, C. Both performing to generate liquidity and non-performing to clean the balance sheet can be securitized. Okay, provided they meet RBI's eligibility criteria. So both of the loans can be sold. Kindly note, such a detailed discussion is there over here. You will not find this on any channel, anywhere you will not find this. Okay, because nobody has gone into your book so deep. So, performing assets are sold to generate liquidity. They are sold at higher price. Non-performing assets are sold at lower price. Okay? Got it? Which organization has been instrumental in advocating for bad bank model in Indian banking sector? Bad bank model. Again, you will find it in the chapter. Bad bank word is there. Niti Aayog, IBA, ED and IMF. So I'll give you the answer. I know many of you might not be knowing it. It is IBA, Indian Banking Association. IBA had created this bad bank concept. Bad bank means what? That bank will get all the bad loans of the bank. Means bank, let's say SBI, let's say PNB, let's say all these banks, they will sell their NPA. They will sell their NPA to this bad bank. There will be one bad bank. Okay? So all these banks will sell their NPAs like this. This is known as a bad bank. Okay? Mr. Vijay, aged 55, has the following income and investment details for the financial year. Look at this. Okay? Mr. Vijay is having these details. So what are the details? Look at it. Income from housing property, self-occupied. He has taken a home loan and paid rupees 3 lakh as interest during the year. Okay? So let me give you this amount. Income from housing property. 3 lakh he has paid as the interest. Okay. How much is the exemption allowed? Very good question. How much is the exemption allowed? How many of you have read this? How many of you have read this? Yes. Anyone got this? Yes? How many of you have got this? Anyone? Let me see. 2 lakh exemption, 24B. Right. Who's this? Amita Patel. Very good. See, exemption is there. Agreed. Now one concept I'll clear. One doubt in your mind. Exemption is there. 2 lakh. But there is a problem in that. What is that problem? See, if I'm having the house, okay, if I'm having the house, pay attention to whatever I'm telling, okay, pay attention everyone. This house is 3 parts. Let's say my house is vacant. My house is vacant. See, if I'm having a house, I can do only 3 things. I can keep it vacant. I can myself live, self-owned, self-living. Okay, self-living I'll call it. Self-living. So I'm living there in that house. Number 1, vacant. Number 2, I'm living there. Number 3, I've given it on rent. And I'm showing this rent in income tax. I'm showing this rent, that I'm getting a rent income. So in this case, kindly note, section 24B is applicable. But 24B says that, now as per the latest trend, latest norm, 24B says that if the house is vacant or self-living, no tax exemption, no tax exempt. Again, only if you have vacant or self-living, you will not get any tax exemption. If you have given it on rent, then only tax exemption will be there. If you have given it on rent, then only tax exemption will be there. Correct? Rental income exempted. Correct, Monica? Only then tax exemption will be there. These 2 cases, you will not have any tax exemption. Now look at the case. See this. Following details. House property self-occupied. Pay attention to this word. Okay? Now you tell me, how much tax exemption is available to this person? How much tax exemption is available to this person? Who can tell me now? Anyone? Yes, anyone? How much tax exemption is allowed to this person? Zero. Very good. Zero tax exemption. Okay? So there will be no tax exemption to this person. No tax exemption. Look at this. New tax regime, tax-free interest payment, self-occupied. 24B, nil exemption. Clear? There will be no tax exemption. Only if it is rented, only then the tax exemption is allowed up to 2 lakhs. Up to 2 lakhs. Okay? Got it? Everyone clear? Balancing delivery channels at urban bank. This is the case study. A small case study. Read this. Properly read this, everyone. I'll have some water. Read it, everyone. (9:45) timing. Danishka, 9:45. Read this. Urban bank serves diverse customers from young professional wanting 24/7 access to elderly clients preferring personal service. The bank utilizes dual channel strategy It maintains physical branches for complex tasks and offering a personal touch while simultaneously promoting remote channels for convenience. This mixed approach ensures that customers can choose the medium that fits their immediate needs, improving overall satisfaction. This is a case given. What is the case? Pay attention. This bank is focusing on two channels. One is personal channel, means physical, and second is online channel. Because it wants to serve both type of customers. Old customers also, old customers who prefer personal services, elderly who want personal service, and young ones who want online. So the bank is using both. Okay. Now based on this, let's see the questions. Which of the following is considered as a remote channel? Branch counter, extension counter, mobile banking, and loan officer. Which of them is a remote channel? Think of it. Which of them is a remote channel? Yes? C, correct. Okay, in the meantime, everyone has started reading the PDF which I have given. In the class which I had given the PDF, complete RBWM PDF. All of you have started reading. Kindly type yes in the comment section. I had given you numericals PDF also. But first I would suggest read that RBWM complete PDF. Have you started reading it? All of you. Have you started reading it? Because mind it, 90% of your paper will be from that PDF. Mind it. Okay? You will see, when you come from the paper, come back from the paper, those who have read it, those who come back from the paper, because I have gone through your entire book, see, I have gone through your entire Macmillan book and then prepared that PDF. Okay? That PDF is not prepared like that only. Gone through your entire book and main notes have been taken. So, kindly note, 90% of your paper will be from that PDF which I have given. Be very clear about it. You will score 60 plus if you read that PDF 2 times. I would suggest 2 times or even 1 time now. Now only 2-3 days are remaining. Even 1 time you read it properly with attention. You will score more than 60 plus. Okay? Don't miss this. Got it everyone? Clear? Don't miss the PDF. Okay? So, remote channel means this. Okay? Next one. What is the main advantage of physical channels according to the text? Means to as per the para. So, advantage of physical channel, low operational cost, personal touch, 24/7 availability, instant transaction speed. So, what is the advantage of this? You tell me everyone. What is the advantage? Personal touch. Very good. Personal touch is the answer. Personal touch. Physical channels are for personal touch. Okay? What is the primary benefit of the remote channels? Primary benefit. Remote channels. Check this everyone. Primary benefit of the remote channels. Think of it. Everyone give me the answer. Yes, the answer is high cost, high personal touch, convenience, freedom, and reduce security. Obviously, C is the answer, right? Convenience and freedom. Remote channels offer freedom and convenience. Which of these is not a type of remote channel? Not. Kindly note, not a type of remote channel. ATMs, internet banking, extension counters, and mobile banking. Not a type of remote channel. Again, not a type of remote channel. Yes, not a type of remote channel. ATM, internet, mobile, yes. So it is obviously extension counter, right? Extension counter. So this is the answer. This extension counter is the answer. Now let's solve this one last and then we'll stop. But before that, I have to give you one information, all of you. Kindly note, before solving this problem, see everyone, kindly note this. One sec. Increment pro batch for CAIIB for December exam. Kindly note this. Increment pro batch for December exam is starting on 23rd of May. See, all of you are right now in the studying behavior, studying tempo. Don't miss this. Because once you clear JAIIB, don't take a break. If you take a break, I'll tell you, the break remains forever. The rule of life is always simple, now or never. Now or never. Immediately join this. Immediately. Clear JAIIB, immediately join the CAIIB batch. Start studying. CAIIB is much more tougher as compared to JAIIB. I teach to CAIIB also. The toughest subject ABM and BFM I take in CAIIB. But I'll tell you, it requires 6 months studies, compulsory. In CAIIB, you can't just watch the marathon and clear the paper. Not at all possible. In JAIIB, you can do this. But CAIIB, it's not possible to clear the paper only with marathons. You have to go through the papers. You have to go through the studies. So everyone must focus on this increment pro batch starting on 23rd May without fail. Okay, all of you should join this. Okay, this is what I wanted to tell you, important one. Got it? Now let's focus on this problem and then we'll stop. I purchased a house in 2019 for 20 lakhs. I did plastering in 2021 for 5 lakhs. In 2024, I sold it for 40 lakhs. What is the capital gains using non-indexation method? See, the question is non-indexation method. What is the capital gains using non-indexation method? What is the answer? Non-indexation. PDF is given in the class, Kunal Kumar, okay? PDF is given in the paid class, okay? It's already given. Tomorrow also I will give you. Tomorrow, if you are joining today, tomorrow also you will get it, okay? Tomorrow morning 6:30 is the batch. So you will get it in the morning also. Tomorrow morning you join. Now only you join. Tomorrow morning first lecture is at 6:30, okay? So at that time you will get the PDF also, complete RBWM PDF. So now what is the answer for this, everyone? I did plastering in 2021 and I want non-indexation method. Non-indexation means what? See, there are two methods in calculating capital gains. Okay? There are two methods. One is indexation, and second is non-indexation. Non-indexation. You will get a numerical on both. You will get a numerical on both, either this or this.